MMTLP stock is going crazy right now. It's all over the news. In this video, I want to go over a petition out there right now that has over 10,000 signatures. It actually gained 100 signatures during the make of this video. I also want to go over a Reddit post that has gained over 3,000 upvotes, a lot of viewership. To me, it looks like the guys in suits are messing with the small little guy retail investor once again. This looks like it's GameStop all over again. Make sure you like this video, subscribe to this channel, and let's get started. So let's start out with the petition. So Meta Materials, MMAT, it's a stock, is a Canadian company that uplisted on the NASDAQ on June 2021. In order to be uplisted in the US exchange, the company had to merge with Torchlight Energy. So as many of you guys know, to get into the US exchange, there are like two main ways: either file through the SEC or merge with a company. As stated through the SEC filings, if you held your shares of Torchlight Energy through the merger with Meta Materials, you were entitled to a Series A preferred share, a dividend. Upon completion of the merger, a shareholder would receive one share of a newly created company, NextBridge Hydrocarbons. This is the new company that's going to be made, and it's supposed to be created tomorrow, December 14th. As a condition of the SEC rules and regulations, a reverse split occurred during the merger, and the U.S. shareholders received one Series A preferred share dividend for each share of Torchlight they own and a half share of MMAT. The reverse split also affected Canadian stockholders. They had a different conversion rate, and that's not that important. But basically, ticker appeared in the investor brokerage accounts and was coined MMAT-A. Okay. So that's that part. Now let's look at what happened in October 2021. In October 2021, an unknown entity found and exploited a loophole in the filings and created a market for the Series A preferred shares dividend. And when we're going to find out in the Reddit post later on, we have a pretty good idea of who did this and how they were able to do this. And there wasn't really much permission taken from anyone in the business. The preferred A shares became tradable on the OTC market and were mysteriously named MMTLP. Holders of these OG shares received notice that MMTLP appeared in their brokerage accounts with a cash value of 50 cents. It was later discovered that these shares could be bought through a small handful of brokerages, but listed as sell only in other brokerages. One of the brokerages that I think bought and sold these was Webull. If you sign up using my link below, you get 10 free stocks. But I just want to put a heads up out there. You will get 10 free stocks. I will also get paid a commission. And also Webull does order payments for order flow, which we'll get into later on. So it's up to you if you want to sign up or not. Investors who could buy shares of MMTLP did so in hopes of buying into NextBridge Hydrocarbons and adding to their positions, had hopes of entering a trade with seemingly endless potential from its current value. If it's 50 cents, how much more money could you lose, right? And the company was going private. And then on November 22nd of this year, shares of MMTLP reached an all-time high of $12.50 from 50 cents a share. Imagine how much money some people made. And most of these guys, I'm assuming, are retail investors. These shares of MMTLP were soon to be shares of NextBridge Hydrocarbons, which is going private and will not be tradable on any exchange. Meta Metals provided the Securities and Exchange Commission, SEC, with the S1 filing on July 15th, and after a few revisions, it was approved on November. Now, the filing was approved by the SEC and the DTCC. FINRA, Financial Industry Regulatory Authority, was then asked with implementing the spinoff and providing brokerages with corporate notices. Now, there's going to be a spinoff of the hydrocarbon company that we mentioned. It was supposed to take off tomorrow. Let's see if that happens or not. So, the next purchase orders would be allowed until 4 p.m. Eastern Time, December 12th, but buyers would not receive shares of NextBridge Hydrocarbons if purchased after December 8th. Which, that's a little bit confusing for me. If the purchase orders are allowed till December 12th, not sure what December 8th had to do with it. On December 14th, MMTLP would cease to exist, which is tomorrow, and eligible shareholders would now own shares of a private company, NextBridge Hydrocarbons. On or around November 18th, the S1A was approved by the SEC, and the November 18, 2022 Form S3 was uploaded to the SEC website. Now this is where the craziness happens. A revision to the metamaterials filings was rolled out by FINRA, and trading of MMTLP was halted. And the code they referred to was code U3 on December 8th, 2022, which was prior to the December 12th deadline. Brokerages have not still provided their corporate notices. What's crazy is that this is very similar to what happened with Gamestop and AMC a few years back. People were trading it. The stock price was going insanely high. I think it reached a high of $400. And then one day, boom, with a snap of a finger, trading was halted, stock price crashed. Now speaking of all this, let's go to the Reddit post. So this Reddit post has gained over 3,000 upvotes, and I'm going to put links to the petition so you can sign it, and a link to the Reddit post so you can read the whole thing if you want. I'm just going to read the TLDR here. So every single share of MMLP on the exchange is synthetic, which means it sounds like it's fake. And MetaMaterials requested that shareholders direct register these synthetics. This has exposed millions of fraudulent synthetic shares in the hands of SHFs and retail traders alike. And someone is going to be on the hook to provide a dividend that can't be faked in quantities that don't exist. So this is something that happened with GameStop, where it was shorted more than the amount of shares that it had, which means there are synthetic shares that were sold just so it could be shorted over 100%. So where this goes, honestly, I am not sure, but it's far from over. Now, Torchlight, the company that MetaMaterials merged with in America, their CEO was actually on Fox Friends just yesterday. This story is developing really fast. It's getting really crazy, and I'm really curious to see where it goes. From my experience, unfortunately, from what has happened in the past, what I think will happen is that there are hedge fund guys out there that know this stuff inside out. They know the rules, and they have made a living doing stuff like this. And unfortunately, they usually end up winning. And I feel like the retail investors will probably be left holding the bag, as unfortunate as that sounds. Now, I did bring up the payment for order flow. A lot of what happened during the whole GME, GameStop, and AMC and Bed Bath & Beyond debacle like a few years ago was that huge hedge funds like Citadel and stuff like that, they do something called a payment for order flow. And if I'm remembering correctly, what that means is that they find out all the trades, people using the mainstream brokerages for retail investors like Robinhood, Webull, stuff like that. They know what stocks you're buying when you buy them, and they know this a few seconds ahead, or a very small amount of time ahead of time. And so what that allows them to do is adjust their positions. So I'm thinking this is what happened. There was a phone call made to halt the trading of the stock. I think there was a call made to halt the buying and selling, and doing so dropped the share price. A lot of shorts could close their positions, and a lot of retail investors will unfortunately be left holding the bag. Let me know what you guys think in the comments below. I'll see you guys in the next video. Peace.